Hey, welcome back to another episode of our City by City Market Pressure Review series. And today let's look at Sunshine Coast. Sunshine Coast is one of the three major cities in southeast Queensland, beside Brisbane and Gold Coast. And I'll put the links here for Brisbane and Gold Coast episodes for you to check if you are curious about their market pressure as well. But today let's focus on Sunshine Coast in 10 charts. Before we get into the charts, if you are a property investor into market data analysis, you are at the right channel because that's what we do at InvestorKit research team. In this episode, I'm gonna go through 10 charts covering Sunshine Coast's population growth, economic trends, sales market trends, and rental market trends. Stay till the end where I will give you our prediction on Sunshine Coast growth in the coming 6 to 12 months and beyond. So now let's get started. The first chart we are looking at here is an overview of Sunshine Coast market performance. Overall, the market pressure in Sunshine Coast is balanced but moving towards strong. Price pressure now is a 3 out of 5, more of a balanced level. Rental market is relatively strong, 4 out of 5. Incoming supply is balanced to 3 out of 5 because we are not seeing really high building approvals, but at the same time it's not. And growth cycle, affordability, and rental yield, they have all scored low. I will be explaining more in details with our chart 2 to 9. So now let's move on to the next chart. Migration and population trends. Over the past decade, Sunshine Coast's population growth has been strong. Last year, the annual growth was 2.6%. That is much higher than Australia's average of 1.9%. And it's interesting to see that the contributor of the population growth is actually both internal migration and overseas migration. This is really rare in big cities because when we look at other big cities, not only the capital ones, but Gold Coast, Newcastle, Wollongong, Geelong, these major regional hubs, their population growth are mostly boosted by the surging overseas migration. I've never seen such a balance between internal and overseas migration in any other cities. So Sunshine Coast should be proud of itself. Population is strong. How about economy? Unemployment rate in Sunshine Coast has been increasing since 2022, but now it is still at a low 3.6%. We call it low not just because it is lower than the 5% threshold, but also it is much lower than its own last 10-year average. On the other hand, the number of job vacancies in Sunshine Coast is also at a quite elevated level. If we look at the numbers, it is actually close to twice as high as it was before 2020. So Sunshine Coast's local job market and economy are strong as well. Yeah, these two are giving its property market a very nice foundation for further growth. Now let's move on to the property market itself. On the sales market, pressure is recovering. We can see it in several aspects. One is the slight declining trend in days on market, so houses are taking less and less time to be sold, although this trend is still very slight. And two, since early 2024, the recovery in prices has been quite steady. And then another sign is the decreasing inventory level. In 2022, inventory level was as high as 4.5 months of stock. And now, ever since 2023, it's been declining. And currently, the inventory level is just 3.4 months of stock, well within the 3 and 4 balanced range. And this decline in inventory is primarily contributed by the decline in number of for sale listings instead of the recovery in number of sales. In 2025, as interest rates are expected to go down, we expect the number of sales would see a more significant recovery as buyers' borrowing capacity is boosted, interest paid each month should be reduced, and buyers' overall confidence will be boosted as well. So, how about incoming supply? Over the past decade, incoming supply in Sunshine Coast has been relatively high. Building approval percentage is an indicator of incoming supply, and 2 to 3% is usually the balanced level. But we can see here, over the past decade, it's always been higher than 3% for Sunshine Coast. Good sign is, ever since 2022, this number has been going down. As of 2024, it is only around 2.4%, meaning that in the coming 1 or 2 years, we do not see much of a oversupply risk. In the long term, now we are talking about the market cycle. Do you remember in chart 1, growth cycle for Sunshine Coast only got 1 out of 5? So chart 7 here explains why. In the past 10 years, Sunshine Coast house prices grew by 137%. That is around 9% per year. That's much higher than the long-term average of 5 to 6%. And the same thing in the past 5 years. 76% 5-year growth, that is annualized as 11 to 12% per year growth. That is crazily high. And because of this high past 10-year and 5-year growth, combined with its poor affordability, Sunshine Coast's mid to long-term total growth could be limited. And now let's have a look at the rental market. Rental market pressure is relatively high now because vacancy rate has stabilized at 1%. It is not only lower than the 2% high rental pressure benchmark, and it's also lower than last year's 1.5%. Rental market pressure relieved a bit in 2023, but now it's tightened again. As a result, in the past 12 months, rents have increased by around 5.7%. That is not as high as what we saw in the rental crisis, where it's easily to get double-digit growth in a year. However, compared to the long-term growth and compared to inflation, long-term inflation, this is still a healthy level of rental growth. Is Sunshine Coast a good market for investors? If we look at from a cash flow point of view, the answer is no, because rental yield in Sunshine Coast is, to be honest, really low, 3.5%, much lower than the big regional cities average, which is 4.3%, and also it's lower than its neighbors, Brisbane and Gold Coast, where rental yields are just below 4%. So with this rental yield and high interest rates, it will be hard to get a healthy cash flow if you buy now. And then long-term rental growth. The good news is, in the past decade, the rental growth in Sunshine Coast has been in line with most of the large regional cities, 69% compared to 66%. That means, given high market pressure in the rental market, there is still space for Sunshine Coast rental prices to further grow. In the next 6 to 12 months, what do we expect? As we have seen in the 10 charts, market pressure in Sunshine Coast is recovering with a slightly declining days on market, declining inventory level, and steadily increasing house prices. So in the coming 6 to 12 months, we do expect price growth to speed up because of the increasing in market pressure. And what's more, as in 2025, the interest rates are expected to go down, consumers' confidence is expected to be boosted, affordability in Sunshine Coast is expected to be improved because of the improvement in borrowing capacity and the reduction in monthly interest repayment. So that the rate cuts also will give Sunshine Coast property market a boost. However, while in the short term the growth perspective looks good, in the medium to long term, we do believe Sunshine Coast total growth will be limited by its low affordability and its extremely high last 10-year and 5-year total growth. So, Sunshine Coast is the fourth city we examine in our city-by-city market pressure review series. Check our channel for more episodes like this on other cities. And I hope you enjoyed today's video. I'm Junge. I'll see you next time.